In this video, I want to introduce a magic indicator on TradingView that helps you to effectively increase your profit. To add this amazing indicator to our chart, here we click on indicators and we search L1 visual volatility indicator. This one, which is written by someone named BlackCat1402. Alright, this is the indicator, and as you can see is added here below the chart. As the name is indicating, this is a volatility indicator and it helps you to evaluate volatility levels in the market. As a trader, especially if you're a scalper or day trader, you need volatility so you can take advantage of the increased volatility and make profit. There are many volatility indicators on TradingView, and the most famous one is Bollinger Bands. This one, which helps you to identify areas of low volatility and high volatility in the market. In Bollinger Bands, we have a simple moving average here in the middle, and we have these two bands that are two standard deviation from the mean by default. If you worked with Bollinger Bands, so you know that in times of low volatility, the Bollinger Bands become squeezed, and when we have increased volatility, the bands become wider and the price keeps running or going beyond the bands. But one major problem with Bollinger Bands is that in times of low volatility, when the market is usually flat like here, in real time when you're analyzing the chart, you can have many false signals where the bands become wider and the price goes beyond the bands and giving the impression that volatility is increasing, but just a false signal, and the price goes back the other way because the market is in a trading range. But with this new indicator, we don't have this problem, and most of the time when the market is in a trading range, we don't get any false volatility signal from this indicator, and this gives you the power to know with higher probability that when the volatility is actually increasing, so you can catch the movement and make profit. Alright, now let me explain this amazing volatility indicator. Just make sure you watch this video until the end because I'm going to teach you a trading strategy that is very accurate. Alright, this indicator is built based on ATR, average true range, which provides a perfect framework for tracking volatility. And one of the key advantages of this indicator is that it has the ability to adapt to the market condition. And we have a dynamic channel here, which changes based on the market condition. We have two lines here, red and green. And when the red line goes above the channel, the area between the two lines become colored like this. And whenever this happens, I mean having the red line above the channel and having the colors appeared, this shows we have increased volatility. In other times, when we have only the channel with lines below the top of the channel, this shows low volatility in the market, and it tells us that the market is probably flat. Please pay attention that increased volatility doesn't necessarily mean that the price is going to move in one direction and giving you the opportunity to make profit. No, we have also situations like this one where we have high volatility in the market, but the market is choppy and we just have repeated changing of direction in the market, as you can see. So we need another indicator, a trend indicator that can help us with trending and non-trending markets. So it will tell us when the market is not trending, and it also tells us when we have increased momentum in one direction and the market is trending. One excellent choice is Andean Oscillator, this one, which is an editor's picks indicator and written by Alex Grover. This is a very powerful indicator that can help us with trending and non-trending market. When the red line is above the orange line, the price is declining. When the green line is above the orange line, the price is advancing. And when the orange line is above the other two, it shows that the market is flat. This setup is more suitable for time frames like 1 minute, 5 minutes, and 15 minutes because, as I explained at the beginning of the video, this indicator is especially suitable for scalping and day trading. And by the help of this setup, we take advantage of the increased volatility and we catch the movement and make profit. At the moment, we are on 5 minutes time frame, and this is the price chart of euro to US dollar, but no limitation on this, and you can use this trading strategy on any other asset or market. The only requirement is high trading volume and liquidity, both in terms of the asset or market and also the broker or exchange that you're trading, because this is a scalping strategy and the profit and loss that we're going to take are very small in terms of price movement, so we don't want to experience any unreal price gap or large spread between bid and ask prices that can damage our trade entry, stop loss, and profit. Alright, now let's see how we trade based on this setup. When we have a signal of increased volatility from this indicator, which happens after a period of low volatility, then we check Andean Oscillator. The red line or green line should be above the orange line. In this case, you can see that the red line is above the orange line. So a sell signal here is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high and profit target at 1.5 risk to reward ratio. Please pay attention while the indicator is in this situation. We don't take any action anymore. We wait for the lines to go below the channel. In other words, we wait for the market to become flat again, and then again we take advantage of the increased volatility. Here you can see that we have the signal, but in Andean oscillator, the orange line is above the other two, so we don't have any confirmed signal here. But in cases like this, that you can see that the red line is about to cross the orange line, you can show flexibility and wait for the cross and enter a short position. But this trade has lower probability of success. In this case, the trade would get the expected result. But you can see that after this instant declining of the price, the market changed direction and went flat. So better to stick to the role, and in cases like this, that in times of the signal the orange line is above the other two, it's better to just reject the signal and wait for the next opportunity. Moving on the chart, here after this period of low volatility, we got a signal of increased volatility at this point, and when we check Andean oscillator, we can see that the green line is above the orange line, so a buy signal here is confirmed and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low and the profit target at 1.5 risk to reward ratio, which you can see that this trade is a profitable trade. In this case, after the signal, the market quickly became low volatility again, but this trade finally ended up in profit, as you can see. After this low volatility period, here we got a signal of increased volatility, and when we check Andean oscillator, you can see that the green line is above the orange line, so another buy signal is confirmed here, and we can enter a long position at this point when this new candle is opened. The stop loss below the previous swing low, and this trade is also a profitable trade, as you can see. Moving on the chart, here the market went to a low volatility period again, and after that we got a signal of increased volatility at this point. When we check Andean oscillator, we can see that the red line is above the orange line, so a sell signal here is confirmed and we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high, and this trade is also a profitable trade, as you can see, where the price declined down to this point. Moving on the chart, here after this period of low volatility, we got a signal of increased volatility at this point, but in Andean oscillator, the orange line is above the other two, so the signal here is rejected. Again, the market went to a low volatility period, and here we got a signal of increased volatility. In Andean oscillator, the green line is above the orange line, so a buy signal here is confirmed and we can enter a long position at this point when this new candle is opened. But this trade is not a profitable trade, and you can see that the price declined after that and hitting our stop loss. But again, here after this low volatility period, we got signal of increased volatility. Here the red line is above the orange line, so a sell signal here is confirmed and we could enter a short position at this point when this new candle was opened, and the trade gives us the expected profit. And this is the most important point that you must pay attention. No trading strategy can give you 100% guaranteed signals. This is not possible in reality, and losing positions are always part of the game and you need to manage them properly. There is a risk management strategy that is called 1% rule, and it's a perfect choice for scalping and day trading. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it because risk management is the key factor to become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.